Hi, Mike Swanson here. I want to show you something today. Visit with Andy here for a moment. But this is my office where we trade out of. I don't think you've ever been in here before. But I was talking to Andy on the phone, and he had sent me some interesting charts. We had a good discussion about them, and I thought I wanted to share a few some of the insights we got out of them. And this is more about the long term and not the short term. I know it's so easy to get caught up in what's happening today in the market or the past couple of months after we've seen this big carnage and correction that's, taken everyone by surprise and punched everyone in the stomach. But if you step back and look at the big trends of the market, there's a lot to be learned from that too, which is really easy to miss with what's been happening. So, how you doing?
Oh, good. Mike, how you doing?
Oh,
buddy?
pretty good. I thought I'd let everyone come in here and share what we were talking about earlier this morning with them.
Oh, I see you brought the charts in.
Yep.
The ones that we were talking about, I had made comments about and sent to you and everything. Well, this is a good chart right here. Yeah, this is a good one right here for you to start with.
Oh yeah, that's a long term.
Yeah, you got the depression here, the Great Depression, and you got the consolidation range that follows the depression right here. Then you got the major secular bull market here. Got another consolidation range right in here.
Yeah, in the 60s and 70s.
Mm-hmm.
But that's what we're talking about today was these long secular bull markets. There's one after World War II up to about 65, one from 1982 to about 2000, and for most people, they're used to thinking about the stock market in terms of the big bull market that happened in the 80s and 90s. And people kind of have the expectation that, they can just sit in the stock market, they can make a lot of money over 20 years and be able to retire and so forth. But if you look at the broad market averages, there have been times where if you were in the market for 20 years, you actually wouldn't have made much money.
Mike, a lot of people don't realize that, that's very true. And right here you got in the 60s and 70s here, and the breakout in 82 right here, I believe that would be 1982, the market broke out and you have 20 years consolidation. We've had two pretty major bear markets in that consolidation range.
You're talking about in the one in the 50s and the 70s?
The 60s and 70s.
60s and 70s, yeah. Here's a chart of it.
We got the 60s and 70s. Yeah, here you go. This is a good chart right here. You got the consolidation range right here from 65 to 82. The top, I believe it topped out at around 65, 66. And just like I know, Mike, that if you were holding stocks, if you had bought back here in the 50s, you're talking 20 years of consolidation here before you entered another a major bull run. Now, the stocks that you're holding in this consolidation range are going to be the stocks you need to be holding when it comes time to the next great bull run?
Probably not.
Probably not. You might have 1 out of 10, and the rest of them are going to be left behind. These are the type of consolidation ranges that clean up things, and I believe that's exactly what we're starting to see now.
Well, the thing about this is I think we both believe that the market the secular bull market came to an end in 2000. We're in some sort of long intermediary phase before you have another one. Probably won't happen for several years now. But one thing about this range is the market actually made a new high in 1973, in early 74, above the previous highs in the 60s. And the same thing kind of happened last year in 2007 when the S&P and Dow made new highs, went above their 2000 highs. Then if you look in the 70s when they did that, you had a terrible bear market, and that's what's happened now, terrible bear market too. So a lot of people are comparing the situation now to what's happened in that bear market in the 1970s.
Yeah, you do hear about people talking about that, and you see this right here in the 73, 74 bear market. And notice here that in 74 we actually made new lows, that we broke the lows, made
That's right.
3-4 years earlier. And if that chart is it's just almost exactly like what we're seeing today. The markets a year ago barely break out, make new highs, they fail, and now the market is bouncing off of the lows of 03. Now, I'm pretty much sold on, and I believe you are too, that the market's most likely going to bounce here, could pause for several months, and probably next year, first quarter, second quarter of next year, we're going to make new lows, which is going to be almost exactly like what you were looking like, back in 1973, 74, the breakdown. And how many people, What stocks are going to be, basically where we're leading to is, what stocks do you want to own when this thing bottoms out in 6 months to a year from now? What's going to make you decide, and what stocks are you going to start to buy, when we're at that point?
Well, the thing, like, if you look in the 1970s, even though the stock market didn't really go anywhere, and like you're saying, what stocks you want to own, and 1 out of 10 is going to be good from the beginning of that period to the end. But most people, don't trade the market at all, or don't really know how to pick good stocks out and big sectors out. They just chunk all their money in some mutual fund or something, and I think those people are going to be still having a tough time, because I know that's the majority people. I mean, the people on our website that are members aren't really like that, but this goes out to people that aren't members. I mean, there could be someone that just randomly are seeing this video or seeing us for the first time or whatever, and really don't know much about investing. And those are the people like I'm kind of concerned about right now, because they lost a lot of money last year, and they're just simply holding on. And if you look in the 70s, the market did go back up to the high of the 60s and mid 70s after that horrible bear market. But those people that didn't adjust or do anything, the best thing they managed to do was just make their money back, and then the market come back down, they lose it again, and they weren't really making any money. I mean, they would have to hold from 75 to 1982, 7 years, and then have the market break out and do something. So basically, for 7 years there, they were just spinning their wheels, and I'm afraid that's what's going to happen to a lot of people going forward.
Right. These times here are cleanup times. The times here, the consolidation range you see in the 60s, 70s, and the breakout in the 80s. This is where the market cleans up all the weak hands, all the garbage, so to speak. You take a guy or anybody that's holding stocks in here, and say he has 15 positions. By the time 10, 15 years later, in 1982, you get a breakout, you get this massive run where all the wealth was made.
Yeah.
How many of those stocks out of that 15 that he's holding is going to be in position to break out and make that run? I bet out of the 15 it'll be only 3 or 4. The rest of them are going to either, one of them's going to be, 2 or 3 is going to be bankrupt. A couple of them are going to be basically penny stocks. And some of them are just going to just drag along at $10, $12 range, probably where they've been trading at for the past 20 years. The whole key here is to be in a position, I believe, Mike, and I know you agree on this too, that in 10 years from now, 5, 10 years, we're going to come out of this consolidation range and we're going to enter another major bull run. The opportunity is going to be enormous. Now on the short side of this thing, looking, over the next year or two, short, time frame, I believe the market's going to probably bounce, hold up here, and then it's going to roll over here and probably make new lows. Same thing that you saw right back here in this consolidation range here when the market was actually made new lows. I mean, panic's going to really set in, I believe, next year. If the market breaks the lows of 03, I mean, that's when everybody's going to say, hey,
but the thing is, though, even if it does that, or even if it doesn't do that, it doesn't really matter to me, because there are going to be sectors that line up. Once the market has a pullback or whatever, there'll be some good sectors that line up and should go up for a year or two, no matter what the market does after that point. And that's what you saw in the 70s. You had several sectors that did well and were in bull markets of their own, despite the rest of the market going sideways or whatever. For instance, of course, the oil and energy stocks and gold stocks, commodities did real well, but so did casino stocks, because Atlantic City just started up in the 70s. They had a bunch of casino companies and went crazy. So there's always something going on in the economy or changes that benefit certain sectors, even if the economy or the market as a whole isn't doing too good. And there's a couple that we're kind of looking at now, and I'll talk about them in more detail in a follow-up video probably next week or something. But I just want to drive home the point to people right now that, if they're just sitting in mutual funds or whatever, they're going to have to become a little more active with their investments.
Right. Mike, I know that it's important to you to explain to people just how important these charts are, and to being able to see the big picture and how to invest, and how important. I know you're probably more excited about this pullback here and this correction than probably just about anybody in the country, because you know how to take advantage of it. And I've seen you do it before. I've done it before. And I can't tell you just how excited I'm starting to get, because I know it doesn't matter to me if the market makes new lows or not. You and I are going to be looking for relative strength. And when we spot those issues next year, in the middle of next year, that's when you can make these enormous returns. And it's easy to do it, because it's going to jump out at you, and I know you'll be able to help everybody be able to see that, and they're not going to miss it this time.
Well, the thing about it too is, for the most part, like I was saying, there's just right now just like really two sectors that look like they have that potential, and I'm sure there's going to be more, but I have no idea to know what they are. And that's one reason, like, I've been real cautious and telling people really not to jump in the market the past couple of weeks and try to buy with the intention of holding for a long time, because it's hard to know which stocks are going to be the good ones after this bear market comes to an end right now. I mean, there's two that look good, but that's it, or two sectors. And that's real important, because if you look like in 2000, those last couple of years of the 90s, Cisco and Oracle and those big cap tech stocks did so great. Mm-hmm. And everyone tried to buy them over and over again throughout that bear market, thinking that they would be the new leaders again. And the same thing's probably going to happen here. That's everyone focuses on the stocks that led a year ago or whatever, and then it's going to be new ones coming up. And we have to keep our eyes out for that. And what I want to do too is explain to people, show them exactly how we pick those out. And that's something I plan on doing, probably in a week or two in a follow-up video also.
Something I think is really important that people just don't realize, that it's not luck of making it in the stock market. It's not. It's something that you can, you teach yourself a set of rules and fundamentals using technicals, and there's actually a way, using relative strength and using weakness in the market. And you've taught me that when I met you years and years ago. And it's not blind luck, and you're going to prove it to them again. I know you've proved this to people several times, because people, when you was talking about the bear market back in 2000, 2001, you was always writing about it, and people were always upset because you was telling them, say, hey, you better sell your stocks. And everybody's always emotional with their stocks and never want to take a loss, but in the long run, it really, you got a good reputation calling that bear market there, and the same thing's happening here. You've been all over this bear market right here also. You called the top on that.
We'll do the homework this year, so we'll be right on this year too, to find some ways to make money no matter what happens.
Exactly. Well, I know that going forward, Mike, that I know you're excited about picking the relative strength issues that are coming up, and we'll do real well.
Yeah. Well, thanks for taking the time
Mike,
to talk to me and talk to everyone else too. And we'll talk to y'all later also.
Yep. Thank you.